Yeah. Apart from foot traffic and sales, are there any other data points you analyze before making an acquisition?
Well, I think that kind of going back to the placer and going back to what I said about investing in communities. Um, we look at the community, we look at the trade area, but uh, a new term, or not a new term, but I guess a term that's easier to define now would be the true trade area. Where does this property actually draw from? When I started 25 years ago, you'd look at the map and look at your artificial barriers, such as highways and train tracks, and then your natural barriers like rivers and mountains. And you'd say, hey, this river kind of splits this market into two, and in general, people stay on their side of the river, or they stay on their side of the train tracks or highway or whatever. And then you kind of look at where the other retail nodes were, and the radius analysis was very popular. Okay, it must be a 2-mile radius, but oftentimes it's not a radius. Oftentimes it's a very different shape. And there's no way for you to determine that until you have this type of geoplacing data. And so I think the really hyper focus on that trade area. And then once you defined it, then now it's looking into what's the supply demand statistics there. What's your retail per capita, meaning? What's the income, what's the population growth, what employment, where do those people actually work, and drive time to work, but also, are there employment drivers bringing more people to that area? Then I look at the utilization of the land itself, because when you're buying the real estate, you're buying the building and the land, and sometimes in some cases the land itself's worth more without a building on top of it than with one. It's unencumbered. So I look at new developments nearby, and something specific about retail is really the leases themselves. The retail leases are vastly more complex and I would say more onerous onto the landlord than really any of the other major classes. With apartment leases, there's really no negotiation. You're often docu-signing it, and it's very commoditized. With office and industrial leases, there's some more negotiation there, but it's not to the level of retail, because with retail, some of the clauses that you don't find in other leases would be, for example, your co-tenancy clauses, which means that if your certain key tenants were to move out and you don't replace them in time, that tenant that's remaining, their rent goes down to 50% or some lower amount. And then there's use restrictions where you're not allowed to lease to certain types of uses at the property without their approval. Then there's, could be no build areas and things like that. So I think that those kinds of clauses are heavily negotiated that are absent in the other classes. And you have to really understand it, because if you have too many restrictions on the property, then your ability to relet it, if you're to get a vacancy back, might be really diminished, and then you might have to kind of mark down the rent because of that. So we pay close attention to that. Another thing would be the CapEx that's been done at the property, the age of the roof, the roof costs have really increased quite a bit, and also the parking lot. The cost to repave a parking lot is pretty expensive too. So those two items we really look into. And then we talk with the leasing associate with the property, and also other leasing people within the market, to get a real understanding, because we're oftentimes, we don't live there, and figure that out. Then it gets to the basics: the rent roll, rollover risk, profit and loss, historical P&Ls, and year-to-date profit and loss, and configuration of the property, the spaces themselves. You want fewer elbow spaces. You want a nice configuration of the property so you have easy access and visibility.
Okay, nice.
Got strategy mapped out clean. Landlords, owners, the in-between. Louise with tenants, brokers in stride. Every handshake on the leasing side. Fair Teals walking with broker flow.